So, if the U.S. economy stays on this course, will the federal stimulus eventually come to an end later this year? For more on that and that question, and answer to that question, I should say, Michael Pento, president and founder of Pento Portfolio Strategies, joins us now live from New Jersey. Good to have you on the show, Michael, and I want to ask you, help us with that answer, because a lot of people are saying at the 10 billion clip, we're going to be there by the end of the year. We'll be done with the stimulus, right?
Yeah, I hope so. I hope we'll finally get off of the crack cocaine that the Fed has put us on for the last 5 years. But unfortunately, their whole premise for engendering growth was to reinflate old asset bubbles. They managed to get the real estate market growing at 13% year over year. They managed to get the stock market up, as measured by the S&P 500, up 30% in 2013. The only other thing that I can think of that's up 30% last year was the size of the Fed's balance sheet. So when QE ends and it stops forcing banks to buy more bonds and more stocks and more real estate-related assets, the money supply growth will shrink, as it should. Asset prices will come down. We'll probably go into a necessary recession. But I'm afraid Janet Yellen, who I've dubbed queen of the counterfeiting doves, she will most likely start another round of QE in hopes of bringing up asset prices once again.
Do you mind if I follow up with that? What are you talking about when you say another round of QE? Help us.
I'm saying that the Fed was at $85 billion unlimited QE at the beginning of 2013. They're probably going to take it down to just around 10 billion or 15 billion by the end of this year. I think that starts us off into a recession. We're almost in a recession now. The economy grew at 0.1% at a seasonally adjusted annual rate, as you all know, in Q1. It's not really the weather. You can't blame the weather for bad exports, unless the weather was bad all over the planet. You know, home sales are down in the West, so it's just, you just can't blame the weather for this.
All right.
So I think we're flirting with recession.
Michael, let's assume for just a moment here that the QE stops and begin.
I'm sorry, you can't assume the QE is fine, because we just had a GDP print of 0.1% at an annual rate of growth. So you can't say home prices are down 0.33% in the first 4 months. The Dow Jones Industrial Average is up 4 points. In 2014, that's 1 point for every month of the year. So the economy isn't doing fine. QE was the reason why the economy had some semblance of economic growth. It's going to fall back into recession, in my opinion, precisely because, as I said, the Fed has been propping up old asset bubbles.
What about interest rates?
Which has led to consumption. Interest rates, I had thought, I was on record saying the 10-year note should head towards 4%. It's falling. Now, you have to ask yourself this. If the Fed is correct, and we're all on one side of the boat, they say the Fed is correct, we're going to have 3% real GDP growth, and we're going to meet our inflation target of 2%, that 5% nominal GDP, current dollar GDP in this quarter, was 1.4%. But if we're headed towards nominal GDP of 5%, it predict that the 10-year note will be near 10-year notes, so that's telling you that recession is coming.
Okay, I want to explore this a little further. You say the recession is coming, so the question is, these markets, I mean, I just talked about how the Dow was near an all-time high. Are you saying that the markets potentially here could be completely wrong?
Well, the markets are right. The bond market is the biggest market of all out there, and that is going down in yield, up in price. If I'm just finished saying, if nominal GDP is going to be 5%, the 10-year note shouldn't be 2.68% and falling, actually 2.64% of the close today. Why are interest rates falling into an economy that's supposedly having a higher growth rate and a higher inflation rate? Why would that be the case?
So
why is the S&P 500 almost unchanged on the year? Why is the Dow up 4 points? Why is the NASDAQ down?
Okay. I wish we had more time. I got time for one more question. I love this conversation, but I want to ask you one question. For our international viewers, for everyone who's watching, if you were responsible for the Fed, what do you want the Fed to do to avoid that recession that you're talking about?
I don't think we should avoid the recession. I think the recession will be very healthy and cathartic to get prices down to a level that can be supported by the free market. Why do we want to prop up home prices? Why should home prices be rising at a 13% annual rate? First-time buyers can't afford houses. You know who's buying these houses? Hedge funds are buying these houses. They can't afford houses on the first-time buyer. They're too busy paying back student loans that they can't afford. House prices need to fall. The stock market is in a bubble. Sir, the bond market is in a bubble. Asset prices have to fall. And you know, it isn't a sin to have a recession. We've had them before, and we should have one now to reset everything once again
Michael,
at a level playing field.
Michael, forgive me, we're out of time. Great candid conversation. We're going to have you back again. And with all due respect,
Would love to come back. Thank you.
With all due respect, I hold you're at least in the short term wrong about this recession thing, but we'll talk again very shortly. Again, Michael Pento from
Okay,
New Jersey.
bye.
Thank you very much.